So to sum up what the biggest macro trade of all time is, it's crypto going from 2.7 trillion where we are today to, let's say, 12 trillion by the end of this cycle and on to 100 trillion within 10 years. And you've got to understand, this would be the fastest accumulation of an asset class in all recorded history in the shortest period of time. It'll have driven the highest returns of any asset class in all of recorded history in the shortest period of time. In fact, in any period of time. And it will be the fastest accumulation of wealth the world has ever seen.
In a world where the financial scene is always changing, Raoul Pal's voice sticks out from the rest. Pal is a well-known macro analyst and former executive at Goldman Sachs. His observations on the cryptocurrency field are truly revolutionary. He envisions extraordinary growth in 2024 and 2025 and is a staunch supporter of the potential of crypto assets. Pal predicts a massive jump in the value of the whole cryptocurrency market, tripling its present range to reach a new all-time high of $12 trillion. Focusing on Bitcoin, he sees it rising to an incredible $200,000 before the cycle ends, which would set off a chain reaction across the cryptocurrency world. But his hope doesn't stop there. Pal continues to express his bullishness about the cryptocurrency industry by projecting that Ethereum will reach $8,000 per token and Solana will reach $11,000 a token. For him, cryptocurrency is more than simply a means of making investments. It's a doorway to a completely new way of thinking about money and an unparalleled leveling ground for regular investors compared to all other asset classes. We examine the predictions and insights that Pal has shared in his most recent interview, revealing his perspective on the state of the cryptocurrency market in 2024 and beyond. Let's hear what he has to say next.
And what we saw is the internet, which was the fastest adoption of technology the world had ever seen. It grew at 76% a year and then slowed down after year 8 to 43% a year. Crypto has been growing at 137% a year. It's now at 516 million users versus 187 million of the internet at the same stage. And then what we did is assume that crypto just slows down its growth to the same as the internet. I don't think that's going to happen. I think it'll be faster. But it gets by 2025, the end of 2025, we get to 1.1 billion users. So that'll be double the pace that the internet grew. And because this is a network, and the tokens are at your participation in the network, they go up a lot. It's as simple as that. It's Metcalfe's law. So when you've got the biggest technological trend of any asset class in all of history, you're going to make a lot of money if that trend continues. This is why it's the biggest macro trend of all time. But it goes on. If we look out further using the internet adoption growth, and we slow down the trend rate of growth of crypto to the same as the internet going forwards, we get to 4 billion users by 2030. That's half the world's population. Now, will this be perfect? It's been pretty perfect so far. I've been showing this chart for 5 years now, but let's assume not. Either way, these numbers are simply staggering. And that's why you get that log chart of Bitcoin over time, because it's the adoption curve is what you're seeing, which is why the sell-offs, even though they sound terrifying, down 75%, are just blips in the overall trend. And over time, it just keeps compounding growth. You see, to show how starkly this compounds growth, this chart of all of the asset markets since 2011, I think is hilarious. So you've got the usual NASDAQ, blah, blah, blah. So we can look, ignore the top three for a second. NASDAQ, 17%, beating the debasement, that 12% number, and compounded 800% since 2011. That's a good investment. What a great investment the NASDAQ's been. Then we go up. Look at the top, Bitcoin. Bitcoin, every 3 years, is the worst performing asset. The next 3 years, in a row, it's the best performing asset in the world. And even with the drawdowns, those scary drawdowns that everybody hates, it's compounded 20 million% returns. Since we started talking about Bitcoin on Real Vision in 2014, it's up 450,000%. Its annualized return is 139%. That's mind-blowing, right? We've never, ever in history been given an asset like this. But when you go out the risk curve a bit to newer crypto, getting up the risk curve, getting up the adoption curve? Well, in 2016, out comes Ethereum. Out of the gate, monster returns. Huge drawdowns. Compounding returns, 364,000%. Annualized at 149%, which is better than Bitcoin. Solana came last cycle. Again, came out of the gate, fell 94%. What are the compounded returns? 7,713%, which is 200% a year. Right, so there is no asset class in all of history that's ever performed like this, even with the drawdowns. This is why I keep saying to people, you just want to buy and hold them. And if you can make the right switch amongst the big ones as the next big network gets adoption, you'll make even more compound returns. Right, this is the biggest gift we've ever been given as investors. And it's the biggest macro trade of all time.
Before delving deeper into Raoul Pal's insightful observations, let's review a crucial point: the remarkable risk-reward dynamics of the cryptocurrency market. Pal displays a picture created by Yuri and Timus that shows risk-reward characteristics for a range of assets. But when Bitcoin enters the picture, it upends the traditional framework and introduces an unusual risk-reward profile that has never been seen before. Pal notes that in spite of obstacles such as the 2022 recession, cryptocurrency is still a unique potential that is frequently disregarded. By the conclusion of the cycle, he sees the crypto market rising from $2.7 trillion to $12 trillion, and it may even reach $100 trillion in less than 10 years. According to Pal, this forecast represents an increase of wealth that has never been seen before and will eclipse all previous records. He compares it to the combined economic effect of several generations and countries coming together in a single decade. Let's hear what he has to say.
Let's go back to the risk-reward topic. Here's Yuri and Timus chart that I've stolen from him, which is, on the left, is all of the bubbles of risk rewards of assets and how they look. Pretty typical. And this is how asset allocators think about it. But when you add in Bitcoin, you end up with a massive blank page with, at the very top right, this alien risk reward, which is Bitcoin. Crypto is a complete alien in terms of performance and risk reward. This chart includes the drawdown of 2022. So you see, again, I keep saying it's a gift, and people still don't really understand what a gift it is. It's something unlike anything we've ever had in history, and it gives us a hell of a chance to make money. So to sum up what the biggest macro trade of all time is, it's crypto going from 2.7 trillion where we are today to, let's say, 12 trillion by the end of this cycle, and on to 100 trillion within 10 years. And you've got to understand, this would be the fastest accumulation of an asset class in all recorded history in the shortest period of time. It'll have driven the highest returns of any asset class in all of recorded history in the shortest period of time. In fact, in any period of time. And it will be the fastest accumulation of wealth the world has ever seen in the shorter period of time. If we go and generate 90 odd trillion in wealth in the next 10 years. To put that number in perspective, because we're all getting bored of such big trillion numbers, that is, the S&P 500 is $50 trillion. That is the accumulated worth of all the companies that have succeeded and failed and grown over time, driven by the US economy over the last 100 years, is 50 trillion. It's double that. And you're going to do it in 10 years. It's a global wealth shock on a scale never seen before in history. It's like all of the baby boomers coming in and saving all at the same time in 10 years, their entire life savings, plus all of China coming in from the WTO as that opened and the wealth that generated, plus India opening up, plus all the Russians added together and probably doubled. Right? This is the scale of what could happen here. Assume Raoul is a moron. It's always a good thing to do. Maybe I'm wrong. Discount me by 50%. Discount me by 75%. It's still at 25 trillion. It's one of the largest increases in global wealth the world will have ever seen. This is why it's the big macro opportunity. This is why so many of my friends and colleagues, famous macro people, have just walked out of the old world into the new world, because it's like, this is the big one. Macro people look for the big trade. You know, it was the subprime crisis, it was all of that. But the returns coming out of this space dwarf all of those opportunities added together. Gone are the days where an incredible macro year would be Paul Tudor Jones up 100%. People in crypto get that regularly. That's a pretty lackluster year. And in fact, you expect to see several 100%. So look, it's mind-blowing.
Raoul Pal offers some very groundbreaking insights on the risk-reward paradigm in the cryptocurrency industry. His opening presentation is a chart that he copied from Urian Timas and showed how different assets fit within the traditional risk-reward profiles. Incorporating Bitcoin, on the other hand, goes above the standard and offers an unparalleled risk-reward ratio. Pal emphasizes the significance of this oddness, pointing out that it is a significant opportunity that is frequently disregarded or misinterpreted by many. Pal maintains that cryptocurrency is still a gift unlike anything in history, providing a fantastic opportunity to profit on unheard of wealth creation, even in the face of setbacks like the 2022 recession. His projection of the crypto market skyrocketing from $2.7 trillion to potentially $12 trillion by the cycle's end, and even reaching $100 trillion within a decade, is nothing short of staggering. Pal emphasizes that this surge would mark the fastest accumulation of wealth in recorded history, surpassing the magnitude of the biggest economic developments in the last century. Pal lays up the scope of this possibility as the end draws near, comparing it to an unprecedented worldwide wealth shock. According to him, this is the big one that macro players have been waiting for, not simply another transaction, defying popular belief. Pal offers some very astounding findings that are changing our perception of what constitutes outstanding returns in the crypto era in a world where triple-digit increases are the norm. Until next time, happy investing.